Top Trader is brought to you by Sanlam iTrade and powered by Pegasus, now with a new Iris trading platform.
A new day. Little sleep for some who tossed and turned over their stock selection. But before we find out whose stock did the best, an early morning lecture with Nerina Visser on performance measurement, risk, and other quantitative tools.
I know yesterday was quite a hairy day in terms of feedback from the mentors and in terms of sort of revisiting some of your strategies. What I would like to do today is maybe to give you a better idea in terms of how you are being measured and monitored in the competition, but to take it beyond that also, not only focus on the competition itself, but maybe to just give you some insight and some skills and ideas also to take with you on the longer journey, because this is not just about the period of the competition. Ultimately, this is about upskilling you, about teaching you things that you can certainly use either in a professional capacity or otherwise even if you just remain a private trader. Quant has got a very broad application within the investment and the trading environment, all the way through from very fancy derivatives and hedge funds and financial structures, all the way through to purely just the ratios that you would be looking at when you evaluate a company, such as your PE ratio or your dividend yield. When we look at performance measurement, I'm going to talk both about the real-world experience of performance within a portfolio, but then also specifically as it relates to the Top Trader competition. And in particular, I'm going to spend a little bit of time on the differences between average returns of a portfolio or an index versus the benchmark index return, as one is familiar with seeing it maybe in the newspaper or on news feeds in terms of different indices that are available. I think as traders, we tend to focus a lot on price movement and purely on what the price does from one day to the next or from one period to the next. But really the price change in a share only reflects a portion of the performance that will be achieved from an investment. So when we're talking about investment, in particular investment return, it's important to also take into consideration all the non-price issues or direct price issues. Those would typically be distributed along capital distributions, your interest payouts, and finally dividends. So even when one thinks in terms of additional return that is to be garnered, there's a lot more than just your dividends that is paid. What falls into the aspect of capital distributions? Well, these could be the result of a fairly complex corporate action, such as an unbundling strategy or a rights issue or maybe a consolidation of shares or those sort of things. Or it could be something as simple as a company paying the investor a cash dividend, but that dividend is paid not from the retained earnings of the company, but actually from the share premium account. And then finally, the pure dividends, if I can call them that, cash dividend. The next topic that I want to touch on is the topic of trading and investment costs, because for the purposes of this competition, of course, you have got the fortunate situation that you are not penalized for trading costs. But I think it's important that one understands in the real world what impact that can have. Let's just talk then about the performance measurement from the Top Trader competition. As I said, your absolute performance is very much about total return based. So when we measure you in this competition also, we will not only look at price changes. Yesterday I heard many of you talking about the fact that you're also looking for the dividend that will be paid out, or you think that will provide further impetus to it. If that is part of your strategy, bear in mind that you need to be aware of when is it being paid and what's happening. Also, remember that there's quite a big difference between what we call the ex-dividend date and the actual payment date. Payment, the actual cash flow of that payment, might happen a long time after that. Typically, for South African companies, 10 days. For international companies and for many of our dual-listed companies, it can be as much as 4 to 6 months after the ex-dividend date. If you look at the level where the brown graph peaks, or the position I should rather say on the x-axis where the brown graph peaks compared to the green one, you will see the difference between your all-share return versus the average constituent return. So the all-share index during this period lost 2%. Why? Because there are more of those bigger companies that underperformed the average return, which was -1.5. Happy to say that more than half of you have done better than that. So, you have a question.
Are you saying that when it comes down to elimination based on our portfolios, it's not necessarily the person that's got the weakest portfolio in terms of rands that is going to be eliminated? You might choose to eliminate another contestant because you feel they're not taking enough risk analysis.
Too much, too little risk, maybe not sticking to the game plan. Yes, you're absolutely right.
If you're the lowest, you don't have a guarantee that that's it.
Exactly. So if you are ranked last, you're not necessarily out. If you're ranked first, you're not necessarily the winner.
24 hours are almost over. The time has come for Nerina to separate the bulls from the bears. Whose stocks shot out the lights and whose tanked. But first, Nerina adds a twist.
There was a secret or surprise additional participant in the competition that you were not aware of.
Very easily be someone that they really wanted to pick initially but didn't get onto the show.
One more person to worry about.
The mystery contestant was actually myself. I decided if I'm going to subject you to all of this, I need to do the same.
During the 24-hour period, the all-share index fell 0.2%. 6 contestants outperformed the market, while 3 underperformed.
And before I tell you who gets the reward, I want to tell you what the reward is. The person who wins this challenge has the opportunity to cancel one of his trades that he's done in the last 3 weeks. I'm happy to announce that the person that will be allowed to cancel one of his trades of the last 3 weeks is the guy who invested in Peregrine.
We were actually watching it, like in the last few seconds we were watching, and I watch it online where there's a 15-minute delay, so I never knew with my e-liquid share whether it was going to jump back down. So very happy. I need this 1% at the moment.
After the challenge, the contestants were taken on a field trip to the Johannesburg Securities Exchange. Walking through the doors of the JSE, contestants were greeted by the Director of Equity Markets, Leanne Parsons.
We have been running electronically for a number of years. We've been voted the best regulated exchange in the world for the 2nd year running by the World Economic Forum Competitiveness Report. So we are always watching you. So I'd like you to join me in the auditorium and we'll give you a brief overview of how the equity market operates.
In the auditorium, Equity Market Business Development Manager Nicola Komninos puts the JSE into perspective for the contestants.
My team is responsible for the strategic development of the equity market. So it's looking at, do we need to change market structure? Do we need to bring new products to market? Do we need to change some of the rules to accommodate more trading, etc.? So it's things like that. And also then just looking lots of research, analytics, things like that. But the reason we're really here today is to talk about the equity market. And I think you can't really talk about the equity market if you don't look back into the history of the stock exchange. Now we've been around for over 125 years this year. So established in 1887, which you guys probably know, just after the discovery of gold in the Witwatersrand. And the reason I mention that is you'll see when you look at trading activity on the exchange and market capitalization of companies, we sort of highly weighted towards resource companies and the mining sector. And that's really because we were founded in that era.
The JSE and the FTSE formed a relationship where they jointly developed FTSE JSE indices. Now these are designed to measure the performance of the major capital and industry segments of the South African market. Mark Randall and his team are involved in structuring some of these indices. He explained to our top traders how they work.
How do we make sense out of all of this noise? Is we do something called rebasing. So we said, what if each of these 15 stocks had been trading at 100 Rand per stock on the 3rd of March, 3rd of May rather. So if they had all started at the same point, at the same price, where would they be trading today? Our next step says, can we take an average price?
The contestants are now getting used to being overloaded with information. They had mixed feelings regarding the value of the JSE to them as traders.
In terms of the way it would affect my trading and the way that I select shares, not really.
My perspective of the JSE actually hasn't changed. I just had a great time today.
As traders, we're just expecting our trades to be matched, hopefully. We're not thinking about the back office side in terms of that. That's a given. We're just hoping that all works and that we can get our platform and do the trade.
It's nice to see how it all operates and to see where the magic happens.
It was quite good. It was more reinforcing what you knew, but in a broader aspect.
I learned that some modern art structures are bears that don't look like bears, but I also learned that each point in the Aussie is 142 million rand.
So the battle lines have been drawn, the pecking order established, but it's early days still. Let's see who can make best use of their trading skills learnt so far. Top Trader returns next week. Until then, keep your eyes on the prize. Coming up next week in Top Trader, the contestants get tips on technical analysis from Warwick Seltzer.
Go from the high there to the low there using Fibonacci.
A fun challenge in the studio.
Not really that fun.
And a serious trading challenge.
I really hate quants. Wow.
And take it in, up in here.
The game is on. You can feel the tension, you can feel the pressure.
My shares performed quite nicely today, so elimination would be nice.
To get ahead, I'd have to increase my day trading. It's not how you start, it's how you finish.
Get in or get out. So if you can't deal with the pressure, get out of the kitchen.
Yeah, I love Nerina. I think she's still cool. No hard feelings is what I'm saying.
Catch the next episode of Top Trader.